Now, profit-taking activities drove market sentiment on Nigerian equities market on Wednesday, and as the market winds down today, Ayodeji Ebo, the head of retail investment at Chapel Hill Denham, tells us what is driving sentiment today. Thank you so much for your time today, Ayodeji. Looking at what the market performance this week for
Yeah.
you, though, what has been driving sentiment?
Okay, thanks. If we look at last week, we saw market was on the upbeat, and this week we've seen a bit of profit taking. But when you check, do a further dive, you would see, like looking at the market today, if the major light of MTN and Dangote Cement lost, but if not for that, we would have seen market gain significantly because we saw some major gains in Seplat, Zenith Bank today. But by and large, we feel that market is still a bit soft when we look at the high yield environment and vis-a-vis the expected dividend yield. We don't expect that much demand or interest like we saw last year in the equities market. So it's still a bit very soft, and we believe that for the equities market, yes, for pockets of maybe a few companies that have released very impressive results, we'll see that significant demand for their stocks by domestic investors, and for some foreign investors, they are also reinvesting dividends that were paid some few weeks ago.
All right, but when you look broadly at the earnings that have come out in the first quarter, though, I'd like to get your take. And for you, what trends have you noticed?
Okay, thanks. I think starting from the fast-moving consumer goods, we've seen that for most of those companies within that space, they've been able to improve their top line, which shows that because they have that leeway to be able to increase prices. For some, volume have not increased significantly, but because of the increase in prices, that really boosted their top line. And you look at the agri sector, both Presco, Okomu Oil, very impressive results. I think the restriction in terms of importation and the reduction in availability of FX has made most companies to look inwards and see and patronize more of domestic firms. So that also has boosted their earnings. Within the banking space, it's a bag of mixed fortunes. We've seen some that have improved in terms of their top line. So we saw specifically looking at Access Bank, and we saw the increase in their interest income. And when you can trace that to the significant gain, about 82% gain in income from investment securities, which shows that they were able to take a position that favored them, most likely shorting at the beginning of the year, which because we've seen yields trending upward. So that increased their opportunity to make more capital gains. Then if you also look at the industrial goods space, we've seen that strong, that's positive earnings even from Dangote Cement, Pua Cement. And we believe by and large, overall, the results have been largely positive, if not for the high yield environment that is being the major incentive for investors to invest in the equities market. We would have seen a major rally in the Nigerian equities market.
All right, but I would like to take you back to the banks, though, and looking at how things have played out so far. What stands out for you? And I'd also like to get a reaction from you on the news I just read earlier about Moody's placing First Bank on review for downgrade.
Okay, thanks. I think what we've seen, or a bit of surprise, is that significant increase in impairment charges across most of the banks. So we saw that across most of the tier one banks. And but when you check in terms of the loans of most of the banks, you will see that for most of the top banks, even like Access Bank, loans and advances were flat. So it means that in terms of creating credits, we're not seeing much from that side. We didn't see much from that side within the quarter. And when we speak to the First Bank regarding the current review from Moody's, which is expected and because of the current developments of a new management and also some of the discussions with CBN. So we believe that with this review now, for most of the fund managers that have it in their portfolio, to also sell them because some portfolio managers buy sometimes based on rating of a particular company. So with this current development, we further decline, though FBN holdings has not declined as expected after the new development. But with this, we may still see further decline. Their Q1 results wasn't that impressive. Top line was almost flat, but we saw that sharp decline in their bottom line with significant increase in impairment charges.
Right, but let's get into one sector that I think are also very crucial here, which we're going to be talking about in the next interview after yours, is the telecom space and how you see performance playing in that sector.
Yes, I think is in line with expectation, or I would even say exceeding analyst expectation. So we've seen that significant jump in revenue from data, which we all know that because of the work from home policy and the restrictions across, so a lot of people had to depend on data, and that is also reflecting. Also, what came as a surprise, we didn't see that much impact of the suspension of new SIM registration in the books of on the performance of the companies, both MTN and Airtel Africa. So I think by and large, it means that the future is bright, and with the resumption of registration for new SIM, so we believe that would also still complement, and they will be able to sustain that momentum in terms of the growth trajectory that we're seeing in their top line and bottom line. So we believe that there's still a lot of potential within that space, and for most of the telcos, by the time they also start the implementation of the payment service bank, by which I feel most of the telcos have also applied for, by the time they start the implementation, that would also help increase their revenue from mobile money. And with that, we'll be able to support that positive and upward trajectory.